Hey everybody, Real Estate Ninja here. I hope you're doing great, coming from the nice country of Canada, Vancouver, Canada. I actually want to talk about mortgage demand. Story out of CNBC, I think it's very telling. Let's go through it and I'll chat about it. Mortgage demand took a big step back last week, even after interest rates fell further. It says, after a strong start to the year, mortgage demand plunged last week despite another drop in interest rates. Total mortgage applications volume fell 9% last week compared with the previous week, according to the Mortgage Bankers Association's a seasonally adjusted index. It's a mouthful. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances, which is about around $726,000 or less, decreased to 6.19 from 6.20. That's nothing. Literally nothing. I can't believe they're even pointing this out. With points falling to 0.65 from 0.69. It's literally worthless data, but hey, there it's right there. For loans with a 20% down payment. That is insane. The rate was 3.78% the same week 1 year ago. Now it says even with rates well off their recent highs, applications to refinance a home loan fell 7% for the week and were 80% lower than the same week 1 year ago. Let me stop right there and say that's straight up scary. Even though it's falling, even the fact that anybody right now that's refinancing a home loan is refinancing at much higher interest rates. That's insane. Or they're really crazy and they just got a home loan and the new mortgage rates dropped like literally 1/8%. And they go, oh, let's spend a bunch more fees and points to refinance it. Absolutely crazy, okay? So that's really got to show you a sign, what's going on, the sign of the times. Now it says, homeowners may have jumped back briefly after the holiday lull, causing demand to rise over much of January. But overall, there's still very few borrowers who can benefit from a refinance at today's rates. So demand is now falling again. Mortgage applications to buy a home fell 10% for the week and were 41% lower year over year. While both, I'm sorry, I just get too excited about all this. While both home prices and mortgage rates are coming down steadily, the supply of homes for sale is still quite low, and that may be keeping mortgage demand under pressure. Look, this is why I wrote that course. I'm so excited because you want to be able to show people these signs of the times and where they are right now, and then show them if the government does this, you need to go do this. If mortgage rates do this, you need to go do this. If the economy does this, you need to go do that. And the point is that this gets me excited, but what really gets me pumped, well, actually, one thing that concerns me is that people are so ready. They've been waiting. It's like the auto market to go and pounce and get that car they waited or jump into a new home. This takes time. So what I want to do is be able to instill and encourage you to have patience, to really get a good understanding and knowledge of macroeconomics and how it affects the housing market. You have time to prepare, but the sooner you start preparing and getting ready, your finances ready to go buy not only a home, but many homes, the better off you'll be. That's why I started the course right away. I was gonna start it later, but I'm going, you know what? There's a lot to benefit of learning how to budget your money, how to set up your finances, so when you go in front of the banks, you're getting the best rates, not paying points. They actually want your background, your financial backing for that home, because they're gonna salt your good credit, your situation over a bunch of crap MBSs, but that's a whole nother video. Now it says mortgage rates have been moving in a narrow range for the last few days, but that could all change depending on commentary expected from the chairman of the Federal Reserve on Wednesday. And this is Wednesday. I haven't even looked at the news, but I expect them to raise only about 25 basis points. I could be wrong, but they're trying to show and give people this excitement that they're that much closer to the Fed pivoting. But what they're going to do is they're going to hold that rate. Wherever they stop, they're going to hold it steady. And that is going to cause a cascade of down numbers in the real estate market, all right? As more and more people get laid off, there are going to be more and more people, and think about this right now with Google laying people off and Amazon, all these people, like Tech Central up in California, where that was the city, the area of California that was just thriving and feeding all of these home price explosions all over California and other states, right? Now those people are getting laid off. So not only that income's not there to put into the real economy, but they're going to need to sell their home if they can't find enough of a job, a new job that actually pays similar to what they are because they were already completely in debt up to their eyeballs, right? You're gonna see more and more homes hitting the market in the next 3 months than you have had in the last 3 months. Because as we get into deeper and deeper into this crash, and the snowball keeps getting bigger and bigger, you're going to see more and more opportunities. And that's what I want for you guys, to see more opportunities. It says right here, the central bank is expected to hike its interest rates, but that doesn't necessarily raise mortgage rates. It actually does. It just takes a little time to trickle through. Who writes this stuff? The monthly employment report Friday could also move rates decidedly, depending on what it says about the state of the economy, recession, and inflation. Let me know in the comment section what you guys think about inflation. How's it working out for everybody? I don't think it's very good. Guys, this is an exciting time. Why? Because you are being shown something that's coming ahead of time, and you have time to get ready and prepare. Guys, I thank you so much for watching this channel. Thank you so much for supporting me. I believe in you guys. You're gonna absolutely crush it in this next market cycle. With that being said, this is the Real Estate Ninja, and I'm out.